Hello traders, Gary Wagner here. It is 12:57 in Honolulu, 5:57 in New York on Wednesday, 16th day of November 2022, and this is the daily report for gold and silver. Gold closed fractionally higher when compared to yesterday's close by only 20 cents or 0.01%, with December futures currently fixed at $1,777. Out of the last 9 trading days, there have only been 2 days in which we have had red candles, and in both cases they've been very small candles. A near parabolic move in which we have not seen any correction that is noteworthy since this rally began during the first week of November, when gold touched upon $1,621 and is now approximately $150 higher. Gold gained with mild dollar weakness aiding it. The dollar itself lost 0.14% and is currently fixed at 106.15. Lastly, silver. After yesterday's strong decline of over 2%, it is in essence unchanged. The net change is 0.002, and we have December silver futures currently fixed at $21.52. Because we are getting closer to the Thanksgiving holiday, Christmas, and of course New Year's, I am starting to put together not only my forecast for next year, but my summation as to what we saw this year. Today, we focus on 2 things: the short-term, nearly parabolic move that we have seen in gold over the last 9 trading days, as well as a look back throughout the year and looking at the overall characteristics of how gold traded this year. That, combined with my 2023 forecast, will be my end of year show. You're getting to see components of that. First, we're looking at a 60-minute chart. This represents the last 9 trading days in gold. When we break it down to an hourly chart, starting from this bottom that occurred on the 3rd of November, what we can see is that the characteristics, although it looks parabolic on a daily chart, is spurts of price ascent followed by periods of consolidation, another price advance, consolidation, price advance, consolidation, price advance, and then consolidation. In other words, what we have witnessed is a scenario in which gold rally, consolidates, and then repeats that process. This next chart is an overview or a detailed look at what we have seen occur in gold over this last year. We have highlighted the beginning of the year with a vertical line signifying the 3rd day of January, which is the first trading day of the year. Gold was trading just at around $1,760 in that area, and the first part of the year, January, February through March, was really defined by a rally, taking gold within $10 of the all-time record high, coming in at $2,077. That also was the same moment that the Federal Reserve, which had left interest rates at near zero since 2018, made their first rate hike. Obviously, we saw a quick and decisive reaction, and what would follow would be a multi-month decline, really not ending until October. And the most significant component that's easy to observe is we would trade to a high, we would then trade to a low, but when we came up, we would have a lower high than the previous high. The market would then correct again, and we would then have a lower low than the previous low. We would repeat this process throughout the entire year with a series of lower highs and lower lows, and that was really up until we hit this last lower high mid-October, and then we had what I'm labeling as a triple bottom. On the last low that was made, which occurred, as I said, on November the 3rd, it also corresponded to the conclusion of the November FOMC meeting, the last 75 basis point rate hike by the Federal Reserve. You can see that occurred throughout the year, but here's the difference. That's when we really saw gold begin to rally, to move in a near parabolic manner, and for the first time since this extended multi-month correction began, we saw something unique that we haven't seen since March, and that was the first higher high. You can see that occurred above this. Now what we need to see is wherever this rally finishes off, when the correction comes in, the correction must be a higher low than the previous low, and then so forth. And that will give us confirmation on a technical basis that a rally has in fact not only begun, but is in full swing. And that's why I believe that the month of November began like a lamb, but looks like it will end like a lion, with resilience and gold moving to higher pricing. As you know, we've been trying to position ourselves, but after missing this bottom, I was reluctant to enter and am now waiting for the correction to begin, conclude, then enter the market from whatever point that is for the next leg of this rally. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.